also happened to work at one of these storied companies, and it's Yahoo. The tech pioneer was the first guide for people through the fast-growing internet in the mid to late 1990s. Along the way came legendary products such as Yahoo Search, Yahoo Finance, Yahoo Sports, Yahoo News, and Yahoo Mail. These are timeless products, and they endure today as the go-to trusted guide for millions around the world. Quick plug for Yahoo Finance, because I am so darn proud. We are #1 in our category by a wide country mile. This week, Yahoo has put its own innovative stamp on its long timeline of history making. The Yahoo team has debuted Yahoo Scout, a new proprietary AI-powered answer search engine. I could sit here and tell you how I was up all night using Yahoo Scout on Yahoo Finance, because I was, and it was awesome. But let me welcome on the person leading the innovative charge here at Yahoo. That is Yahoo CEO, Jim Lanzone. Jim, I have to be honest with you, man. I almost came on here wearing a purple hoodie, but I said to myself, look, I mean, I love Yahoo, but I don't interview other CEOs wearing purple hoodies, so I'm not going to do that to Jim. That's how excited I am about Yahoo Scout. Jim, why'd you launch this?
Well, by the way, Brian, I almost did the same thing. I almost came on wearing all purple and thought against it, you know. Look, as you know, when we first came into the company in very late 2021. So the first thing we had to do was lead a transformation of the business, and that took a little while. But starting in about 2024, we got through that, and we started relaunching every product that we operate. As you know, Yahoo Finance got a big upgrade. Things like Yahoo Fantasy just had its biggest year ever. Yahoo Mail just had its biggest day ever. We've been building an ad tech business with our DSP. So we've been doing all these things, but search is still one of our biggest businesses. And up until yesterday, we had not touched search ourselves really since 2009 through a partnership with Microsoft, which we still have for web search. But as of yesterday, Yahoo Scout is our new AI-powered search engine that we built internally with a lot of partners, including Microsoft. But it really brings all the rich data, from our user relationships, all the usage over the years, our 30+ years of search history, our content verticals like Yahoo Finance. And we brought all that goodness together to answer people's questions in a really unique and interesting new way that we think adds new value to the category.
Jim, like I mentioned, plugging your appearance on LinkedIn and X this morning, I used this last night to create a condensed research report on Netflix. I mean, it fired up a report in seconds. As you look into the future for Yahoo, why is something like this so important?
Well, look, search is changing, and it's still the main way that people are finding everything online. The first generation of AI search engines really were chatbots, and they were very conversational, and they went out and essentially took all the information from the internet and brought back to you in a conversational mode. But it was, very limiting compared to a lot of the things that web search did well. And with Yahoo Scout, we actually are also returning answers, direct answers, in a somewhat conversational fashion, but also bringing the best of search to bear with highly visual responses and a lot of direct links to the sources of information where we get our answers from. In some cases, that's something like Yahoo Finance that we do internally, but in a lot of cases, that's the open web. And so what you'll see in Yahoo Scout are also a lot of highlighted links out to the sources that the information comes from. So we're also actually kind of going back to the original social contract of search, which is we get our answers from publishers out there, but then we also send them traffic back. And that really has been a core value of what we built here with Scout.
In this AI moment, Jim, how important is it that we reestablish that social contract with publishers?
I mean, I think it's incredibly important if we want to keep getting great answers because the businesses that they run on their own websites are how those answers are generated. And so the good news is it's actually better for the user experience. We really think with this product, we've hit the sweet spot between chat and traditional search and really blending the best of both. But in doing so, also keeping the open web very healthy. And we think that's really important. We also think that can be true for search advertising, which also has not really crossed the chasm to this first generation of AI search. And some of the things you've heard out there have been really display banner ads, which ironically Google first did in 2000, 2001. They sold banner ads before they built AdWords and kind of took a page from the book of Overture. We think actually traditional web or search advertising can come along for this ride as well, and we're also working on that.
Do you envision Yahoo Scout going eventually to something like OpenAI does, like paid paid memberships, paid subscriptions?
Well, it's definitely free to start with. And, I think including Yahoo Finance, every great free business on the internet maybe has a premium tier. We have that with our subscriptions to Yahoo Finance. I could see that happening here as well. But we really do think the core business can be subsidized very well with search advertising that we think comes along to maybe a new format, but really does that. By the way, the other great thing, and I think this hits Yahoo Finance users very, very much as well, is we also launched the Yahoo Scout intelligence platform. So yes, we launched an AI engine called Yahoo Scout, but then we're also bringing Scout out to all the properties of Yahoo. And so in Yahoo Finance, for example, if you search up any quote for any stock, you'll see a button that says Analyze. That will dig deeper and actually give you the latest information on what's been happening with that stock. It does the same thing in Yahoo Sports. Go to any game summary, like during the Super Bowl, and you'll be able to see a Scout button there, hit it, and it will give you a really robust explanation of what's happening in the game beyond the box score. We do that in Yahoo Mail. We do that in Yahoo News. So that intelligence platform is really informing all of Yahoo. So this has really been a two-way thing for our company, which is all the verticals and all the parts of Yahoo come together to help create Scout. But then Scout is actually going back out to the properties to make them stronger. And as we get to the next generation of Yahoo Scout, which will be personalization, you'll see that even more.
Everyone knows Yahoo, Jim, and I'm convinced everyone knows you. And that gives you the luxury of picking whatever model you wanted to. But you went with Anthropic. What stood out to you about Anthropic?
Yeah, and they've been, first of all, it's obviously one of the highest quality, if not the highest quality, large language model. Yahoo ourselves, we're way too small to be creating that ourselves. We'll leave that to to others. But also, Anthropic and Claude, they had not really worked with many consumer-facing companies yet, and they have been amazing to work with to let us, kind of take all those ingredients into our restaurant. And I should mention Eric Fang, who leads the Yahoo Research Group, was really the mastermind behind this project. We acquired his company Symbol last summer, and that team came in and took over the Yahoo Search Group as well, and really spent the last 6 months only building this product. So it's pretty amazing to see. Eric, by the way, people know, was he was the founding chief technology and product officer at Hulu. He actually even named Hulu. But before that had worked on Microsoft Bing and other things, very well-known guy in the Valley. So Eric really has been able to bring the best of our content and our data. You mix it with what you're getting from not only Anthropic, in terms of the large language model, but also Microsoft Bing for grounding. And you pull all those things together, and Eric and his team, create with that this amazing new product that stands up on its own.
Jim, you and I have a mutual friend in VC, Bill Gurley. You, of course, known him for a lot longer than I have. I recently had him on my podcast, and he said, Brian, a lot of these companies that are raising large amounts of money in tech to support their model ambitions, they're losing a ton of money. They're going to lose a lot more money. Can this pace of capital raise continue for these companies? And what do you think about the valuations?
Well, I think I have the benefit of having a day job that is all encompassing. And so, I know what they're doing is very expensive, and for sure, we've seen these cycles come where a huge amount of investment precedes a lot of growth in the category. For us, we take a little bit different approach in that we spent the first couple of years here really rebuilding the business, getting on sound financial footing. So Yahoo, we make a lot of money, we're very profitable, and we have this great base to start building from. And of course, by not being either an LLM or a hyperscaler, we're not really involved in that level of capital raise. We can do this and actually be growing at a healthy clip. And growing our profits at a healthy clip. So we're in a little different spot from the rest of them.
How would you compare?
But I do hear Bill, my old investor, my old startup.
Yeah, Bill's an interesting cat. How would you compare what we're seeing, this AI moment, to when the internet was being built in the late 90s?
I mean, I think from Mark Andreessen to Reid Hoffman, everyone said it's another moment that's equivalent to the birth of the internet. Some people think it's equivalent to the birth of computers in the first place. That's still yet to be seen. I think, it's funny. I saw a stat the other day that only 15% of Google users have even used ChatGPT, which seems unbelievable. But it reminds me of when we first built streaming services. I spent some time in the streaming wars as well. And only 50% of people 10 years ago had used a DVR. So, people do come along with this a little more slowly, but search has been, I'd say, the first consumer-facing, ground war here. Of course, there's others, coding, for example, and other uses of this. But yeah, I think we're still very early innings of something that is clearly going to be a huge new category, especially in consumer.
You think one model wins out?
No, there's always been room for more flavors. I do think that in search specifically, as we did this project, you can imagine, I'm going to get a bit of a rest now because I was doing every query that I was doing on 5 different engines for the last 6 months. So maybe that can chill out a little bit. Users have had a hard time differentiating between these products. I would say, they know ChatGPT was the one that invented the category perhaps, but for everybody else, it's been pretty thin on differentiation. I've seen over time that there have always been room for different flavors of products, whether it's in streaming or in search. So I don't know that it really resorts to one. I think these companies are going to have to make choices. Obviously, Grok has made certain choices. Who they partner with for their data over time will change the flavor of some of these things. And then on the front end, there's just a lot more we can do. In Yahoo's case, we're bringing data to the table in this product that nobody else has. Because this is our usage data over 30 years. These are our direct relationships with our users. And that's another part of this launch, which is, yes, would I hope that the whole world will use this product? I hope it's that good and that people find it that valuable. On the other hand, we're every month one of the 5 largest properties in the United States in total users and in total usage. And if we just do a better job for our users, we're going to get a huge amount of growth and take a piece of this category.
Jim, I know you're a busy guy. Before I let you go, toughest question I've asked you so far. Have you used Yahoo Scout for your Super Bowl pick, and who is it?
I've not used it for that pick. I'm a 49ers season ticket holder, so I will not be rooting for the Seahawks no matter what. But I have dabbled with it for, for things earlier in the season, fantasy football, college football betting, things like that. And I would say it's very good. Can
you believe Belichick not a first ballot Hall of Famer? The hell's up with that?
I don't know, maybe it's recency bias with this North Carolina disaster, but it's a joke. I mean, he should obviously be in. It would be like not letting Bill Walsh in on the first try.
That is correct, or not having you in the Internet Hall of Fame, Jim. Oh, no, Jim, good to see you. I will be seeing you very shortly, probably in all hands. Jim, thank you so much. Appreciate it.
All right, Brian.
All right, coming up, I hand it off to Jennifer Schomburger in D.C., who was at the Treasury Department Summit. Hopefully, she's using Yahoo Scout. We'll be right back. A major milestone in financial markets. The S&P 500, the benchmark U.S. stock index, has crossed 7,000 for the first time. Really major news here. But again, I will remind everyone, it's just a round number. Companies are valued in terms of stock valuation, profits and sales, but nonetheless, good to see. Let's go to markets and data editor Jared Blickery for a check on markets.
Thank you. Let's check in on the market here. We got the Dow up about 38 points, inching closer to a record high. I'll show you the really short intraday price action there. Everything in the green so far. But again, this is pretty muted volatility. NASDAQ, though, that's up about 0.5%. And I got to show you the S&P 500 back at record highs. Hit a record closing high yesterday. We got a record intraday high. And it was just briefly above 7,000 for the first time. Here we go, 7,002.28. That is the high for today and for all time. Let's also check in on the Russell 2000. Small caps up about 0.2% today. And I do want to get a check on the bond market. So we're going to start with the 30-year. This is up about 3 basis points to 4.86%. The 10-year is up 2 basis points to 4.24%. And the U.S. dollar index, we're going to call that about break even right there. Although you can see overnight spend most of the time in the red. And let's check out the sector action where tech has been driving the bus lately. It hasn't been the story all year, but tech is making a comeback recently. Then we got energy, consumer discretionary, and several other sectors in the green, but we got a few in the red too. Healthcare, that is leading down. XLV down about 0.5%, followed by industrials and staples, also utilities and financials in the red there, but not materially. And here we got NASDAQ 100, components and NVIDIA in the upper left. That is up 1.5%. Tesla just behind it. Looks like Broadcom, Microsoft, Amazon, Meta, Alphabet, all in positive territory, but under 1%. Apple about 0.2% down. And let's check out semiconductors. I'm seeing a lot of dark green here. So we got Texas Instruments up 7%, Micron up 4%, Taiwan Semi. We already covered NVIDIA, but Intel here. Intel up 9%, almost 10%. And just checking in on the year to date, we can see it is up 30%. Pretty big drawdown after those that earnings announcement last week, but we are looking at some substantial gains there. And we got to check in on the fortunes of software too, because you don't always see both software and chip stocks rallying hand in hand, but they are today. Here we got Oracle up 2.5%, Snowflake up 3.5%, Datadog, Atlassian, Twilio, and Nutanix up over 2%. And I'll take a look at the Dow here. Here we, aside from the mega caps, we got kind of an even spread between red and green. I did mention some strength in some healthcare names. So we got United Health up about 3%. Back to you, Brian.
Thanks so much, Jared. S&P 500, 7,000. Love to see it. All right, the Federal Reserve is set to make its interest rate decision later today. Investors will be listening closely to Fed Chair Jerome Powell's press conference for a sense of direction for the Fed, which is under considerable pressure from the Trump administration. I'm going to send it down to our Fed correspondent, Jennifer Schomburger, with a special guest. Jen.
Thanks so much, Brian. I'm joined here in Washington by Joe Lavorgna, counselor to Treasury Secretary Scott Bessent, where we are at the Trump Accounts event today. Joe, great to see you. Thanks for joining me.
Great to be here. Thank you.
I do want to kick off the conversation with these Trump accounts because I was looking at some projections. These Trump accounts being rolled out on July 4th, the Treasury giving $1,000 to every child born during the duration of this administration. And if you were to contribute $1,000, if you would have that $1,000, I should say, you would earn $5,800 by age 18, $18,000 by age 28, and if you contribute $5,000 a year, you could have over $1 million by age 28.
Right.
How does this work, though, exactly?
So essentially, as you said, you sign up on trumpaccounts.gov, look for Form 45, 47 when you're doing your taxes. Everything goes live, or you get your money effectively around July 4th. $1,000, then you could contribute up to $5,000 annually. And based on compound interest and historical equity returns, that $1,000 plus the $5,000 per year annual max contribution is worth over $300,000 by age 18. By age 28, it's worth almost $1.1 million. Again, maximum contribution, the initial $1,000 plus $5,000 every year thereafter.
Is it automatically invested in an index fund?
It'll be a low-cost index fund, something analogous to like the S&P 500.
All right, switching gears, Fed is meeting today. We know that the Fed cut 3 times at the tail end of last year, the administration in favor of cutting rates further. The Fed is expected to stay on hold today. What is the administration's message to Chair Powell and the rest of the central bank?
The Fed has talked about rates being high relative to their projections of neutral, and even the central tendencies within the FOMC, their forecasts show that rates are expected to go lower. The Fed has conditioned the market not to expect a January move, and the Fed never goes against strong market expectations. If, however, inflation continues to move lower and we get a disinflationary boom, as we believe we're in at the moment, then that would argue for lower rates. So I'm hopeful that if the Fed is applying the right models and methodology, they will lower rates to at least a neutral, if not accommodative rate, because as inflation comes down, holding monetary policy steady means real rates are rising. Monetary policy becomes more restrictive. And we know policy is restrictive when we look at many cyclical parts of the economy, such as housing. Rates are too high.
Secretary Bessent had teased that we could get an announcement from the president on who the next Federal Reserve chair will be post Davos. We're at Wednesday now. Granted, we still have a couple of days left in this week, but there are some reports that the president is rethinking whether the four finalists have what he wants to be Fed chair. What is your sense of where the process stands now?
The president has four great candidates to choose from. You know, the president's talked about doing it sooner and then he's pushed it out. He wants to be very careful and very thoughtful in his deliberations and his thought process. Historically, these Fed chairs oftentimes don't get announced until late February. You know, we're just used to maybe the president moving so quickly and trying to always go from one accomplishment to the next. So I think, you know, we put a historical precedent on it. You know, it's not unusual. We don't know yet, but I would take the president and the secretary at face value. They're thinking about it, or the president's thinking about it, and we'll get an announcement in due course.
Does it worry you that Senator Tom Tillis has said that he is going to block confirmation, block the process until the criminal investigation into Chair Powell is buttoned up? Do you see Governor Myron, who was supposed to step down by the end of this month, staying on for much longer?
Stephen Myron can stay on until that role is fulfilled. I'm very confident that the president, whoever he chooses, will do an excellent job in running the Federal Reserve, and that person that will be picked will go through the Senate confirmation process and be successfully confirmed.
You're not worried, though, it's going to be dragged out because of what?
I don't believe it'll be dragged out. No, there's, again, the Secretary Powell's term as chair, I believe, ends May 15th of this year. I think that's the exact date. There's a lot of time between now and then, and I'm expecting a successful resolution and the president putting somebody forward who will do a great job running the Fed, whoever that turns out to be.
We're looking at potentially, switching gears, a partial government shutdown at the end of this week if the Democrats don't support funding DHS. Where do things stand now? What is the administration willing to do to move the ball forward on this?
Well, the House has voted on a bipartisan bill, and Speaker Johnson may decide he doesn't want to vote again. Senator Thune is exploring some other options. That's going to be in Congress's it's sort of in their court at the moment, and we'll see where it goes. I hope it doesn't happen. There are many Republicans that don't support a shutdown, even a partial shutdown for that matter, and hopefully won't revisit anything like we did last fall. But my fingers are crossed, we'll see what happens, but I don't know more than that.
And as I mentioned at the top of this interview, we are here at the Trump Accounts event. And I do want to ask you, because we've seen the Dell Foundation contribute over $6 billion, $250 per child under 10 for lower income zip codes. Is the Treasury looking at getting other commitments from other philanthropists and private sector?
Yes. Certainly, and there are other big philanthropists that have contributed. For example, Ray Dalio has committed. Different states are talking about instituting the programs and encouraging people to participate. I would expect as people learn more about it, because the more we've seen people hear about it, oh, this is a great idea, it's bipartisan, I would expect more people to contribute and this to be a real raging success.
We'll have to leave the conversation there. Joe, thank you so much, as always, for your insights. So appreciate it. It's Joe Livornia, counselor to Secretary Bessent. We'll be right back after this.
I'm Julie Hyman. We are 30 minutes into the U.S. trading day, so let's get to the three market catalysts we're watching this hour. First up, we'll have full market coverage ahead as the S&P 500 index hits 7,000 for the first time. Plus, we'll bring you the Fed Day decision guide as the central bank makes its first rate announcement of 2026. And a battleground stock gets set to report. Palantir, due to release earnings on Monday, will give you the case for and against buying going into those numbers. All that and more coming up on Market Catalyst. Let's get a check on what's going on in markets today. We got a mixed picture going on. The Dow, little change, off by about 7.5 points. The S&P 500, though, is pushing to that record. It's not there at the moment, but it did touch above 7,000 earlier in the session here as we sort of got underway, and then came back down below, still up by about 0.25%. The Nasdaq Composite up about 0.5% today. A lot of interesting moves going on elsewhere outside of stocks today, too, that we have to check on. It's worth checking on the 10-year as we go into the Fed decision, even as it's not expected that the Federal Reserve is going to change rates, but will the odds of further rate cuts change as we hear from Jay Powell today, potentially 4.25% is where we see the 10-year right now. If you look at the year-to-date movement there, you get some gyrations. It's moved a little bit higher, even as we still have the outlook for rate cuts this year, which is interesting. We continue to watch action between the dollar and the yen. We continue to see the dollar fall versus the yen year to date, a tiny bit of recovery here today. Also, we'll be watching Bitcoin around the Fed's decision. It did go above 90,000 in recent days, but since then has come back down a little bit. And of course, gold continues to be in focus here as we have seen the big increases in gold prices. But digging a little bit more into stocks, just want to mention here that we are seeing today consumer discretionary and tech help lead here, industrials lagging. It has been an interesting push to these new highs because over the past couple of days, we've seen tech come back. But for year to date, that, of course, has not been the case. We've had communication services is here, tech is here, but it's been energy, materials, consumer staples that have been the best performers year to date. So that has been a pretty significant switch. And then finally, we do have, going back to the intraday here, we do have some companies reporting after the bell today within the tech complex. So we'll continue to watch how that affects tech overall. Amazon getting headlines today as well because it is cutting 16,000 more jobs. Well, the Federal Reserve kicking off its first meeting of the year. Wall Street expects the Fed to keep rates on pause, but it's what's going on behind the scenes that will likely take center stage. Joining us now, Christian Hoffman, Thornburg Investment Management, Head of Fixed Income and Portfolio Manager. Christian, so, we're not expecting any movement on rates today. So where are the fireworks going to come from if there are going to be any?
I think this administration would have loved to roll out a successor to Powell right around this time, perhaps concurrent with the announcement today. But we continue to watch prediction markets and continue to see, a lot of volatility with, Powell's, proposed successor with, Rick Rieder recently surging in the polls and then, having some pushback more recently. I think what the administration is really struggling with is finding someone that is both fiercely loyal to Trump, but also viewed by the market as wildly independent. Those two things are not necessarily, sympathetic to each other. And I think there'll be some more twists and turns here. Again, we've been talking about, call it 2 to 5 candidates, but again, maybe the administration is going to need to look deeper. And again, I don't think we're done here.
Well, does that candidate exist anywhere, Christian?
Like, I think it's a bit of a unicorn. And the good thing, and I think the thing that reassures us is, the proposed candidates largely have been, I think, people with legitimate backgrounds and people that we believe, would be worthy successors to Powell. As it relates to the meeting today, I think the two things that we're focused on are, one, do we have more dissents besides Mirren? I think, that could be interesting. And then two, does Powell, decide to poke the bear and get into politics? Historically, he has not. There'll be a lot of thirst from the media to see that happen, but Powell has been, I think, pretty wise in being, unwilling to poke the bear, so to speak. And I think that continues today.
What do you think? I asked this of a guest earlier, and I'm curious your take. What the market reaction will be if it is, say, Rick Rieder, or if it is, say, Kevin Warsh.
I think the market feels fine with that, and you've seen a market test of these things. I think the administration has been wise to float things out and actually see the response, to get some back channel, conversations to really market test these things. So I actually feel fine with that.
Okay, so Christian, let's then get to actual what's going to happen with rates this year, right? And we're seeing either 2 or 3 as sort of the consensus. What do you think is going to happen? And will that outlook change substantially if there is a different Fed chair, or when there is a different Fed chair?
So most likely we've seen the last of cuts during Powell's oversight of the Fed. He has 3 more meetings, and we're not likely to see any changes in any of those meetings. So I would think of it less of what do we expect for the year, and really think about more uncertainty around the back half. One, because the economic outlook is likely to look quite a bit different 6 months from now than it is today. And 2, because we're going to have different actors really pulling the strings. So I think, 0 in the first half is very likely, but I think the likelihood of having more cuts in the back half is probably higher than the market expects right now. So market expectation is for 2 for the year. I think we could see 3, and I think that will most likely be, weighted towards the back half. As you think about the interest rate picture more broadly, one of the interesting things is if you look at the 10-year, we had roughly 85 basis points of swings and volatility. That's actually a lot of volatility that you're introducing to client portfolios. That said, if you look at the quarter ends actually looked very much like they do today, right around this 420 area. So it feels like this is something of a neutral habitat, or something that we're gravitating to, but it doesn't mean that you don't want to be active in markets and taking advantage of some of that volatility.
And aside from the Fed, of course, geopolitical events have had, an effect on the market, even if fleeting at times. So do you think that sort of 420 level-ish will be consistent, given that we got a long year ahead of us, Christian, for a lot more headlines?
Look, I think this year will actually have more volatility, than the previous year. If the, 3 big things that we're thinking about, we need the AI bubble not to pop. We need the labor market to hold in there, and certainly we have some trepidation about that. And we need the market to remain, have a sanguine response function to geopolitical volatility, which, in just 3 trading weeks, has not been minimal. In a variety of hotspots and very interesting developments really around the world.
And what happens if those things don't happen?
If they don't happen, look, the old cliche in fixed income markets is for strategists to call for a coupon year. It's very easy to do that. It kind of says things are efficiently priced.
What does that mean, a coupon year?
A coupon year means there will be no change in rates or no change in spread, or somehow they will offset, and the year will end very much like it began, and you will clip your coupon for the year. You see strategists call for that almost every single year, and you see that come to fruition almost never. So that old cliche remains intact. And we're looking for volatility this year, which we hope to take advantage of.
Gotcha. What's the best way for retail investors who are trying to watch fixed income for them to take advantage of that?
Look, unless you're sitting in front of screens and trading bonds and have access to being able to trade large blocks of bonds and engage in primary markets, it's really, to turn it over to professionals and to really outsource to folks doing this, 12 hours a day and, fully engaged in the markets. I think the value of active management in fixed income remains non-controversial. And you can look at our track record, and I think it speaks for itself.
Christian, thanks a lot. Appreciate it.
Thank you.
Coming up, the 3 trends pushing ETF investors to once again break inflow records. That's next on Market Catalysts.
Welcome back to Yahoo Finance. I'm Brooke DePalma. Let's turn now to some of today's top analyst calls on Wall Street. We're watching Texas Instruments, Circle, and Johnson & Johnson. First up, Texas Instruments. Multiple firms raised their price target on the stock, including Barclays, Susquehanna, Benchmark, JP Morgan, Mizuho Securities, and Bank of America. This comes after the chip maker gave an outlook that saw improved demand. The average price target on the street is now around $219. Next up, Circle. Mizuho upgraded its rating on the stock to neutral, and price target also got an upgrade to $77. The analyst said since all polymarket bets are settled in the crypto stablecoin USDC, and now sees that as a looming catalyst, but remains on the sidelines as rate cuts, rising costs of distribution, and intense competition from other stablecoin players like Tether. That's the reason it remains neutral. Now keep in mind there are about 15 buys, 11 holds, and 2 sell ratings on the street. Last up, Johnson & Johnson. Morgan Stanley upgraded the stock to overweight from equal weight. The analyst said its commercial momentum is quote, too hard to ignore, and it expects new products to drive a beat on earnings. The analyst also raised its price target on the stock to $262, up from $200. The average 12-month price target on the street right now is $232. There are now 18 buys, 12 holds, and 1 sell rating on the street. But keep it right here on Yahoo Finance because we'll be tracking all the market moves and top calls throughout the session.
ETFs have already taken in more than $100 billion this year. That's on pace to smash the all-time January record of $88 billion set last year. For more on what's behind this growth, I want to bring in Todd Rosenbluth, TMX VettaFi Head of Research, for this week's ETF report brought to you by Invesco QQQ. Good to see you.
Great to be here.
So $100 billion. It's actually more than that by now, isn't it?
It is. So that was when I wrote my note at the end of last week. We're approaching $125 billion. So you're right. We haven't closed the month, so it isn't higher than what we saw last year, but really strong demand sets the stage well. We had a record $1.5 trillion in ETFs last year. It feels like maybe that's the new floor. That's the new normal, which would be a great thing for investors and, of course, the ETF industry.
So what's going on this January? I mean, because it's been a January that has been seeing a lot of tape bombs, as they call it, like a lot of headline risk, a lot of volatility. Is that what has that driven people into ETFs?
So it has, and some of the areas that we've identified are closely related to that. So for example, active fixed income ETFs. They were very popular last year. 40% of all fixed income flows went into active fixed income ETFs, and that trend has continued. We've seen PIMCO's PYLD, we've seen BlackRock's BINC, I guess that's an iShares named product. We've seen Fidelity have some success with its total bond ETF. Given the volatility that's happening in the fixed income markets and the uncertainty, even though many people expect the Fed to do nothing today, and perhaps in the short term, there's still a lot of uncertainty, you turn to an active manager when you're looking for that. And that's actually one of the topics we're going to talk about at the Exchange Conference, active fixed income ETFs gaining ground.
I'm curious then, is the driving factor behind active fixed income ETFs mostly institutional money versus retail investors?
So it's a combination. And so I guess institutional in that maybe we're talking about advisors or people who are running model portfolios. We are seeing them increasingly turn to active fixed income ETFs to choose where they want to have the exposure. But the trading that we're seeing in small amounts for active fixed income ETFs also shows a positive sign. The Fidelity Total Bond ETF is one of those products, very popular on Fidelity's platform based on the data that we've seen.
Interesting. Okay. And then another area here is thematic ETFs, which, I mean, are kind of a stalwart, right? But are there different ones that are sort of driving that demand right now?
They are. So for the last 3 years, we've really seen artificial intelligence focused ETFs be very popular, and that's a trend that people still believe in, and we at VettaFi still believe in. But we've seen some of the products that are the leading ones out there, like iShares BAI, which was very popular in 2025. It's only received more modest inflows. What we've seen is that the more defense-focused ETFs, so Global X has a defense technology ETF, SHLD, which was popular last year, a little bit under the radar because it's not AI specific. It's been very popular this year given the geopolitical tensions. And there's a new ETF, the Rex Drone ETF. The ticker is DRNZ. It just came out late last year. It already has 60 million in assets, which is relatively good for a new ETF, but it's up almost 30% for the year. So investors that have gone into this ETF have been rewarded we think that's a theme that many people are going to pay more attention to as the year progresses.
Interesting. Okay. And then something that we talk about a lot here with Markets Guest is the broadening, right? And I assume that that's happening within ETFs too.
It is. So these were products that are outside of the S&P 500 or not specific to the S&P 500 or the NASDAQ 100 that were unpopular last year. So Invesco has the S&P 500 equal weight ETF, RSP. It was among those large ETFs that bled money in 2025. It's actually the third, I believe, most popular ETF this year in terms of net inflows. So investors are buying into that diversification and getting the S&P 500, but all of the stocks. And so you don't necessarily have as much exposure to Apple and Microsoft and NVIDIA. You have the other stocks. The other one that caught our eye is the Financial Select Sector Spider ETF from State Street. Actually changed the name, and there's a lot more words in the front of it than I'm forgetting right now.
We're talking the XLF.
XLF.
Yes. Okay.
Yeah, so
easier to just say XLF, right?
And so yes. So XLF also bled money last year. It's been very popular this year, a top 10 asset gatherer. So people are looking outside of the technology or the communication services sectors, and financials has been one of those beneficiaries.
Something else, Todd, I'm interested in, as you've been talking, when you were talking about tech and you said that AI ETF, BAI, is seeing smaller inflows, but you didn't say outflows. And you've been talking about all these things that saw outflows last year. In January, does anything stand out for actually seeing outflows, or is it just mostly characterized by smaller inflows in certain areas?
So, well, we've had a great start to the year. So there are some products that are seeing outflows. So even though small cap ETFs have been, some of them have been in favor. Small cap ETFs have performed well. The iShares Russell 2000 ETF has been bleeding assets this year, and we've seen investors go towards some higher quality exposures towards small caps. So the iShares S&P 600 ETF, IJR, has seen some inflows. Avantis has a small cap value ETF that's seen inflows, that's actively managed. And then there's a more modest flows going into a higher quality small cap ETF from Victory Shares, the Victory Shares small cap free cash flow ETF, SFlow. So we are seeing investors, they're either rotating within a certain investment style, but many things are doing well. This is on pace to be another record year.
I have sort of a bigger picture ETF explainer question for our viewers here as we talk about inflows and outflows. Now, even if something has inflows, it doesn't mean the price goes up. Even if something has outflows, it doesn't mean the price goes down, right?
That's correct.
And small caps are just one example of that. Can you explain that to people when we talk about inflows versus price?
Sure. So money going into an ETF means that the ETF asset manager has to go and buy some shares the way that you might think of. A lot of the trading that happens within the ETF ecosystem, I'm selling and you're buying, and that trades and those paths connect one another, and it doesn't impact the overall ETF. But what we are also seeing is that ETFs, even as they're growing in size and scale, 1.5 trillion, as I keep referring to last year, most of the money that is tied to individual stocks is outside of the ETF wrapper. Either people are owning individual stocks, people are owning stocks through a mutual fund wrapper. So the demand that we're talking about doesn't necessarily mean that ETFs are in favor. And there are ETFs that are up in value this year that have seen outflows.
Right.
Silver ETF, for example, a lot of trading happening within that ETF in SLV that happened this week. It's up really strongly, but people are taking some profits in the ETF because it's done so well.
Gotcha. Okay. That's an interesting example. And that is one that has seen a lot of activity along with GLD and some of the other precious metals ETFs.
Yeah, commodity ETFs there's only so many things that we can talk about, but commodity ETFs have been very popular this year also.
It seems like a lot of things have been popular. Todd, thanks so much. It's good to see you.
Thank you.
Coming up, we're looking at some of today's top trending tickers. Stay tuned. You're watching Market Catalysts. Now time for some of today's trending tickers. We are watching AT&T, C3AI, and Corvo. Markets and data editor Jared Blickery is joining me. And first, I want to talk about AT&T. It reported fourth quarter profit and revenue that beat analyst estimates. And Jared, I had the chance to talk to the CFO, Pascal Desroches, and we talked about how the company is trying to push its subscriber base higher. And basically, it is really emphasizing packages. In other words, you buy wireless and broadband, and they increased their numbers there. So 42% of people who have fiber from AT&T also now subscribe to wireless.
Yes, and it's always about all those promos that they can put together and how much are they going to discount. So it looks like they're being disciplined so far.
Yes.
That's the analysts speak for, well, they're not cutting or giving away the farm. But this quarter was really about buybacks and dividends. You could call it the show me the cash quarter. And so here we got fourth quarter free cash flow of $4.2 billion. They have a new free cash flow outlook for next year. That's 2028, $21 billion. So they're aiming to return $45 billion to shareholders from this year. That's 2026 to 2028. And I got some commentary. This one's from Scotiabank. They rate the stock sector perform, price target $29.50. The company was supported by good tailwinds from the now large fiber network base. And from that base, you get to offer everybody new products.
Right.
And then vital knowledge. The results and guide are decent, and the 10% annual capital return forecast for the next 3 years is healthy. And that gets back to all those buybacks and dividends. And real quick, if we just go to the Wi-Fi Interactive, I will show the chart here. This is what's happened year to date. And you can see still just a little bit underwater. Let me just give you the longer term look. Here's 5 years. You can see had a kind of a lift off in this bull market. Started a year later than most of the other stocks, but that is a nice run up there. And then over the long term, this is typical of a telco. This is a lot of sideways trading action over the last, 30 years here, going back to 1995. So that is kind of typical because they give away so much of their earnings in dividends.
Right. That's why even though it goes sideways, people sometimes
Exactly.
hold on to telecom
They
stocks. Something else I wanted to mention that I talked about with the CFO is a couple of big acquisitions that they are about to close and going to be integrating. One is a company called Lumens. The other is EchoStar. And so Desroches talked about that they ended 2025 with accessibility to 32 million homes, and they expect by 2030 to push that to over 60 million. And what he pointed out is when Lumens had access to many of those locations, that their penetration was at about 25%. So that's how many customers actually sign up as opposed to how many could sign up. And he said their penetration numbers tend to be higher. They do different marketing. They offer those bundled deals with the wireless, for example. And so he expects to see some upside, continued upside to people who have some of those package deals. By the way, you mentioned the word disciplined.
Yes.
He used that word too when talking about the fourth quarter and those wireless discounts, that they were more disciplined than they had been. And the number of wireless subscribers actually missed analyst estimates a little bit. He did not seem concerned by that as a result of the disciplined approach. Next up, let's talk about C3AI. That company is gaining on reports from the information on a potential merger. The shares right now up by about 4%. There have been reports in the past that it might be up for sale. Now we're getting a report of a particular suitor potentially.
Yes, so this would be this suitor in particular, Automation Anywhere. So let me just tell you, kind of back up here, what does C3AI do? They have that ticker AI. So this has been on investors' radar for a long time, but the stock has had some trouble over the last few years. So C3AI is a software company that sells AI tools for big organizations so they can use your company data to predict outcomes and run operations better. Automation Anywhere, the tile company, is a leader in robotic process automation, or RPA. This is software bots that do repetitive computer tasks that usually people do, but this is simple stuff like copying, pasting between systems, might be moving data, filling out forms. And so you put these two together and you're thinking, okay, we're going to have potential synergies here. However, I got the reaction from Bloomberg, kind of their hot take. They don't see the synergies right away. And so I don't want to use the word desperation, but there's a lot of pressure in the industry to do something, and this might have been a slightly hasty decision if I'm reading through to this properly.
I mean, although the shares are up by about 4%, I mean, to take another step back and sort of give some context to the company, Tom Siebel is the person who founded this, who also founded a company called Siebel Systems. Basically, he is an enterprise software and technology veteran who's been in the game for decades. However, he stepped away from C3 last summer because of some health issues, and that's what then threw the future of the company into a bit more question. It has a different CEO now, obviously. So we'll see what happens. I see you got the chart up there.
Yes, if we go to the Wi-Fi Interactive, I have a max chart on. So this goes all the way back to their 2021 or late 2020 debut. And you can see it's just been going sideways over the last few years. I'll do a 3-year chart, and you can see, yes, it is 26% down. So it was in a trading range, and it's broken the trading range, hence the pressure on the company, at least by the shareholders.
Yeah. All right. Let's talk about it. Last one, Qorvo. It's an Apple supplier that reported an outlook far weaker than Wall Street had been expecting. And we watch this one closely, even though it's not a household name, because it is an Apple supplier.
Yes. Yeah, they basically get about half of their revenue, 47% from Apple. And here's the money line from the report. Our March quarterly outlook reflects the seasonal decline at our largest customer, which is Apple. And so Qorvo is a company that makes kind of the radio guts in these phones, and Apple phones and a few others, cellular, Wi-Fi, GPS, Bluetooth. And so if Apple is stumbling, well, Qorvo might actually fall. And the hot take here is this reads like a handset demand plus customer mix pain, not just suddenly like Qorvo forgot how to execute. So there are some larger forces at work here. And here's the number line here. Guide calls for $775 million to $825 million in revenue and $1.05 to $1.35 adjusted EPS. Street was looking for higher than that. And so Piper flagging this potential share loss in a key component area for upcoming iPhone models. So just kind of a look ahead to the future there.
Yeah, although reading through some of the other Piper comments and some other analyst comments, it seems as though it's a combination of potential weaker handset demand, but also it sounds like Qorvo is exiting its lower end Android business.
That too, yes.
And so that's having an impact. So it's not a straight line to Apple demand here. It seems like it's a little bit more of a complicated picture in this particular quarter.
Good news is once they exit the Android business, because that is low margin, they will have taken the pain and potentially the things open up from there.
We shall see. Thanks so much, Jared.
Thank you.
Coming up, it's tax season. We explain the changes you can expect when you file your taxes in the coming weeks, or hopefully the coming weeks for you, not later. That's next on Market Catalyst. Tax season officially kicking off this week. Yahoo Finance's Josh Lipton spoke to Tom O'Sabin, the director of tax content at the National Association of Tax Professionals, about some tax filing myths.
Tom, it is great to see you. So let's get to some myth busting here, Tom. Start with a big one, a classic. Does filing early get you a bigger refund, Tom? True or misconception?
Misconception. You know, there are lots of people out there that say when you file early, that's when the Treasury has plenty of money. Busted. No, there is no connection to filing early and getting a bigger refund.
How about this one, Tom? This one's going viral, you say. How about this one? Is it true that if I form an LLC, Tom, I automatically get tax write-offs?
Busted. Another one. You know, just forming an LLC, you might do that for your business, but you're going to have the same business deductions on whether you've got an LLC or a traditional sole proprietorship or a corporate entity. Filing an LLC is not going to get you some additional write-offs that you wouldn't have got anyway. So we're 2 for 2 in the busted category.
How about this one? Here's one I'm sure would interest some viewers. Can W-2 employees, Tom, can they take a home office deduction if they work remotely?
Also busted, but busted after 2017. The Tax Cut and Jobs Act eliminated unreimbursed employee business expenses, and that's really where the bust came from. Prior to 2018, if you in fact would work remotely from home, for example, you could in fact deduct a home office as an employee. In today's world, busted, that's only available for self-employed people. Point to take, if you're working from home and you've got expenses you incur, submit those expenses to your employer for reimbursement.
Here's one. This is interesting. Is it accurate, Tom, that if I don't get a 1099, my friend, the IRS doesn't know about the income?
I have to laugh at that one, and now also busted. I've been at this for 35 years, and the number one thing that a taxpayer says is, I didn't get anything. So if I didn't get anything, I don't have any income to claim. Busted. The IRS is aware of the income, and in today's world, one of the reasons taxpayers may not have received anything is because they have actually elected electronic distribution for those items or electronic contact. Just because you didn't get something in the U.S. mail doesn't mean you don't have income. And just because you didn't get a tax document, you know, the tax law says anything of value is in fact taxable. So no 1099, no tax, busted.
Tom, how common are audits? I ask because I bet a lot of people think, you know what, they're not common. They're rare, they're unusual. Is that true?
Absolutely it is. And I'll go off of my experience again. You have a likelihood of about 1% to 2% of American taxpayers are audited. And the numbers are even smaller if you are in fact a business. But the fact of the matter is, I guess it's sort of like being out there on the freeway, and if you see the state trooper, it'll cause you to slow down. The auditors are out there. They have algorithms that they use to test returns to see if that needs to be challenged, if it falls out of the realm of possibilities of what should be. So the auditors are there, but the likelihood of audit is still very, very small.
What about, Tom, no taxes on tips and overtime? I was just talking to my colleague Emma Ackerman about this, and she was saying, you know, it maybe is not as simple as that headline suggests. What do viewers need to know?
You are absolutely correct. First of all, and including the forms that the IRS came out with, it says no tax on tips, no tax on overtime. But just as your previous guest said, that's not exactly correct. There is a deduction for tips. There is a deduction for overtime. But there are calculations that go into play. And as was mentioned previously, there's also income limits and also income phase-outs. So there can be a deduction for taxpayers, but it is not a circumstance where, hey, don't worry about your tips. Don't worry about your overtime. It's all tax-free. It's more complicated than that.
What about the new rules for 2025, Tom? I don't know if you saw this. The Journal had a good write-up on here, and they talk about increased SALT deductions, new tax break for seniors, a lot going on here. I mean, is it possible, Tom, to say, in your opinion, okay, this is the most important change, or the 2 or 3 most important that you would put on people's radar?
I think we'd start with, and those are good questions, the SALT limitation, which stands for state and local tax. With that being increased from $10,000 to $40,000, and we've been at $10,000 since the Tax Cut and Jobs Act came out in 2018, many people were not able to itemize deductions. With that increase to $40,000, I think there's going to be some impact for people, especially in high tax states. I'm coming to you from the state of Illinois. We have high property taxes. More people, I believe, are going to qualify to itemize. I think that's going to be an important takeaway too. And you also mentioned about the senior deduction. One of the myths out there, and it's you hear it almost every day, is that the new One Big Beautiful Bill Act made Social Security benefits non-taxable. Not true. What they have brought actually is a senior deduction. You just have to be age 65. If you're age 65, there's a $6,000 deduction. It's a separate deduction. It's not part of the standard deduction, not part of itemized deductions. You have a married couple filing jointly who are both at least age 65 at the end of the year. Each one has a $6,000 deduction. But like other things, there is an income phase out.
Finally, Tom, listen, you've been doing this a long time, as you noted. For this tax season, Tom, is there any kind of just common big mistake or mistakes over the course of your career you've seen people make that you would say, listen, don't do this, avoid this?
I would say, I'll talk about from taxpayers in general, as opposed to those who come to a professional. If you're going to do your taxes yourself, which you can, I would say use software. Use software because it's going to eliminate those errors that you're just describing that people have made for many, many years. Math errors, putting the wrong Social Security numbers on returns, forgetting to include income. Use some software and also use direct deposit. It'll take some of those simple errors and the human error part out of it, and you'll get a better experience in filing your return.
Tom, great to have you on the show today. Great advice. We appreciate it.
Great to be here.
Let's go live now to Washington. Our Jennifer Schonberger standing by with Texas Senator Ted Cruz. Jen?
Thank you, Julie. Senator Cruz, thanks so much for joining me today here at the Trump Account Summit in Washington. We know that these Trump accounts are going to be rolled out on July 4th, $1,000 per every child born, but only for children during the duration of the Trump administration's term. Does Congress, do you see a way to codify this, to extend this?
100%. So I drafted the provision, the Trump accounts, and when we wrote it during the process of reconciliation. It was part of the working families tax cut that the president signed last 4th of July. And I think it may well be the single most important part of that bill because it is going to transform every child in America. Every child in America, number one, is going to realize the benefits of compound growth. And every child in America will have an investment account opened for them. Parents, employers, family can give $5,000 a year. That grows in a tax-advantaged account. But critically, that account is invested in the stock market. It's invested in the S&P 500. So, look, if you assume, let's say a little girl is born this year. She'll have an account open for her. That account will automatically be seeded with $1,000. And if her parents or family or employer puts $5,000 a year, if you assume that account grows at the historic rate of growth of the S&P 500, which is 7% a year after inflation, by the time that girl's 18, she'll have $170,000 in that account. And if she keeps contributing to it, by the time she's 35, she'll have more than $700,000 in that account. And that's not just the kids of rich people. That's the kids of a single mom waiting tables. You want to talk about changing the entire country. But secondly, this is what I'm really excited about. We are going to be creating a whole new generation of capitalists because every kid in America is going to be an owner of the biggest employers in America. So if you imagine 10 years from now, a little boy will pull out his phone, and instead of thinking big, scary corporations, instead of thinking, gosh, capitalism is terrible, that little boy will look at his phone and say, hey, I own $100 of Apple. I own $75 of Boeing or $50 of McDonald's. And suddenly our kids have a stake, an ownership. That is exciting. You're right, the way it is written, it is for a few years. I think it is 100% that Congress is going to extend this program and make it permanent. When I drafted it, that was absolutely my intention, to have this be a permanent and transformational program.
To your point, you said children are going to be able to pull out their phones and say, I own $100 in Apple or McDonald's or whatever. And we know that these dollars are going to be invested into the market. But we also know that a lot of these children growing up and a lot of Americans don't have the personal skill set to invest. So we know that American history is mandated in schools. Why not mandate at a federal level investment classes for middle schoolers and high schoolers so they have the tools, especially once they turn 18, to know how to manage their own money?
So I think the right place to do that is at the state and local level. I don't want the feds mandating curriculum. I don't want Washington deciding what curriculum your kids are taught, what curriculum my kids are taught. I think that should be at the state and local level. I think you're seeing a lot of state and local levels saying financial literacy matters. We're going to try to teach our kids. And one of the great things about these Trump accounts is they're going to be a natural vehicle for teaching financial literacy. Again, in second grade, the teacher will be able to say, oh, okay, everyone, pull out your phone and look at your Trump account. Look at what you invested originally. Look at what's been invested over time and look at the growth. And suddenly the stock market isn't just sort of strange numbers that sometimes appear at the bottom of a TV screen. Suddenly the kids are like, wait a second, look at this grow. And I think what you'll also see is you'll see kids as they get a little older saying, you know what? For my birthday, instead of giving me some toy I don't need, maybe you can give me 50 or 100 bucks in my Trump account.
Well, that would be nice. Have some stock.
Yeah, like that. The ability to think like investors. This will naturally prove financial literacy. And when you're an investor, it changes the way you view the entire economy, the entire country.
Switching gears, Senator, Democrats in the Senate are furious over what's been going on in Minneapolis. They are threatening to have a partial shutdown of the government later this week. How do you see things now? Are Republicans willing to give any consents? Do you see coming to the middle at all, or are we barreling towards a partial government shutdown at this point?
Look, I think it is very likely that the Democrats are going to force a government shutdown. We saw a couple of months ago the longest government shutdown in U.S. history. Chuck Schumer and the Democrats forced that right before Christmas, and they did it really because they wanted to throw a temper tantrum, because they were mad and they wanted to show their left-wing base they really, really hate Donald Trump. If you look at immigration enforcement, one of the big reasons President Trump got reelected is the Democrats spent 4 years with open borders, and we saw 12 million people invade this country. My home state of Texas was on the front lines of that invasion. We are now seeing the president, number one, in terms of securing the border, do you know that illegal border crossings have dropped more than 99%? I mean, it's staggering success. And I got to say, I don't understand it. My Democrat colleagues have decided they are the party of illegal immigration. They are the party of the violent criminals and the gangbangers that they released, of murderers and child rapists. And I think it's really unfortunate. I think we are very likely to see a shutdown.
How long are we looking at, though? Is it at 45 days again?
It certainly could be. It's up to Chuck Schumer. I mean, the way the Senate works, you have to have 60 votes to fund the government.
Just a meal today.
We only have 53 Republicans, which means we cannot pass this without at least 7 Democrats. The reason we had a 43-day shutdown is the Democrats wanted to throw a temper tantrum. Remember, Schumer is really afraid of being primary. He's afraid of being primary from the left. AOC is in New York. She's breathing down his neck. And so he's trying to appeal to the really angry left-wing activists. I think when it comes to ICE, the Democrats have decided, they're very explicit. They want to abolish ICE, which is to say they don't want to enforce immigration. They don't want to deport criminals. They don't want to deport gang members. Look, we saw one of my colleagues
Yo, what is going on? ASFX, what's up? How we doing, guys? Sorry, just getting everything together. Had to rush everything. How we doing? FOMC. We got FOMC in 2 minutes. Let me just get my screen up, get my charts. Had to rush on over here. How we doing? David, what's up? Aaron, I think we are live on a bunch of places. I think we're live on X, YouTube, like literally everything right now. What up, Felix? What up, Abby? Abby was on PFM TV with me today as our guest. That was a good stream. Okay, let me just get my chart up. Got so many damn tabs open right now, bro. Okay. Got to get this just in time. Just in time for the news event. Let's go. Trade-Evate had some issues. Trade-Evate was down, but it's looking like it's back up, or so I've been told. If anyone was watching me on Prop Firm Match TV, I was like, because I couldn't trade my Trade-Evate accounts, I said, oh, here it is. Here's the news event. Let me just shut up. I've been in this combine long because I couldn't trade my Trade-Evate account, so I bought some Top Step accounts with Project X. It's funny. It's like the tables have turned, man. Project X was working. Trade-Evate was down. Crazy. I'm in a simulation right now. So, okay, here's the news. Remember, guys, FOMC, you usually get two moves. You get the initial pop or drop that happens on the data release, but then you usually get a secondary move at 2:30 once Powell starts speaking. So, listen, maybe we'll hit max profit right here on some combines. I haven't traded Top Step in months. It's been a long time, so that might be fun if I can get some XFAs. What I wanted to do was full port my Apex evals. I got a few more because they're running 90% off, but I couldn't set it up in time. Get some music on. Aaron, how are you doing? Khaled, what's up, bro? I haven't seen you in a minute. Gabrielle, Steve, how we doing, guys? Okay. Sorry, I'm still getting all my stuff together. Hopefully we could trade some actual funded accounts. I'm gonna check Trade-Evate in just a moment. What do you guys think? Is this trade an L or a W? Am I cooked, or are we gonna be good? What you think, chat? Steve, you just put your name down for the early migration. Listen, guys, like it's actually really funny, right? Because we've been having all these issues with Project X, and now Project X is working today. Trade-Evate's down. I'll tell you right now, I've been using Trade-Evate for years. Since I was using Trade-Evate before Project X even started, and I've never had it go down on me. Not once. This is the first time I've ever seen it go down while I was trading. So, listen, shit happens. Juan says I might be cooked. I think I'm cooked, bro. Oh, we're so cooked. It's all good. Hopefully, let's get Trade-Evate up. Let's see if we can trade our Trade-Evate accounts. I got some Apex PAs, and we also got Top 1 futures. Unfortunately, I took a small loss in both of these accounts, you'll see here, while I was trying to just test out Trade-Evate. I was trying to test it out, and I ended up taking a small loss by accident. Oh, little sweep there. Oh, huge SMT right now. Starting to look like ES wants to go a little bit lower down to this low. Yeah, I think that long is going to be cooked, but we'll see. Tradeify switch happens on Friday. Listen, man, you're going to be better off with Trade-Evate. Just trust me on this. I know everyone, they love the Project X user interface. They think it's easier, simple to use. Trade-Evate is not complicated to use. You do not need to be a rocket science. Just get used to it. It's a better platform. Better speed, better execution. No spread, no slippage. I'm telling you, I get spread and slippage when I'm trading Project X. You don't get any of that stuff. Does anyone know the trading news rules for Top 1? I don't think there is any news rules, man. I don't know specifically if there's any differences with the Ignite accounts, but there's definitely not news rules with like instant funded. That much I know. Am I listening to Powell's speech? Well, Powell isn't going to start speaking until 2:30, so we could pull it up. It'll be my first Tradeovate account, so it'll be fun to see. I'm telling you, man, it's a better platform. Man, let's log into Apex too, because I'm telling you guys, I'm feeling bullish still. I'm feeling bullish still. NQ did, it still didn't touch its previous day's point of control, but it came damn close. Like, I want to get long 2 micros here. We're going to do it. We're going to take the risk. Oh, we got filled. So we're filled. Even though we did take a loss, though, earlier. That's what sucks. All right, so I'm filled on a long. Let's go to MNQ. Oh, I got to log into Apex. I'm just feeling bullish, man. Maybe I'm wrong. I'll take the risk. We're going to give it room, though. I'm going to give this trade room. We're only in 2 micros because the thing is, I kind of got my eyes on these equal highs up here. I think we could eventually get there. It might happen when Powell starts speaking. Like, we might go lower first, but I think I kind of want to just look to see how long we can hold this to ultimately go back up. NQ is very close to its all-time high. We go down to we go up to the 4 hour. We got the all-time high on NQ right here. Still holding this 4 hour bullish fair value gap as well. And as far as like draws on liquidity to the downside, I just don't see anything I really like. So listen, we're in really light. We're just going to chill. We're going to chill for now. I'm glad everybody knew that we were going to go live at 2 p.m. instead of 1 p.m. today. So I have this yellow box marked out right here. This is a 15-minute bearish fair value gap. If we can get an inversion, so a 15-minute closure back above this area, so that's like 212, I think we rip up to the high a day. And that's kind of why I'm trying to position myself. I could be wrong on the bias, man, but I'm just trying to position myself with a small enough position size to kind of just let it rock and sit in some drawdown. Yeah, I don't even have a hard stop on yet, but I will probably not let it go much further than the previous day's point of control. Hold on, this feels wrong. There's no way the POC is this low, is it? I think it is. That's quite a ways away, I'll admit. I feel like this is wrong. Hold on, let's look up the POC. Okay, yeah, no, I didn't set these. So POC is right here. This is what we want to pay attention to. So listen, you could, honestly, you probably will go a little bit lower down to this POC, but this is going to be my area that the market needs to hold, all right? As long as we hold this overall zone, I'm going to try to stay long biased and look for these equal highs up here. Maybe even just higher. So we'll see, man. I think we also put in a bullish SMT divergence at the lows. We did. ES made a lower low right here, while NQ is not taking out that low. So that's helpful for us too. Erkan's in the building. Erkan, are you still short, brother? Or did you take your money? I hope you took your money. It's crazy that this thing is still alive. All right, now we just wait, man. We just wait. Erkan, you flipped long. Where did you take an L? I don't know, man. I'm still feeling the longs. Like, I still like the longs. As long as this 4-hour fair value gap holds up, let me mark this properly. We got this 4-hour gap, right? As long as this area holds price and the point of control holds price, I'm just trying to follow trend. I'm literally just trying to follow trend. Honestly, that was a pretty lackluster FOMC news release, though. Not much happens. Not much happens there. Like, if I was trying to full port my my Apex evaluations for 1 day pass to try and pass in one trade, I probably would have got smoked because there was no follow through on either direction. We swept the high, we swept the lows. One thing about FOMC, if you guys are new to trading FOMC, it very often has two moves. You have the move that happens when the news comes, and that's usually the fake out move, and then you go a different direction. It's just something I've noticed. It's anecdotal. I don't have data on it, but it's something I noticed. You don't usually just get like a straight shot on FOMC compared to something like CPI. You usually get a straight shot in either direction. You don't really see that as much with FOMC. I see we're live on YouTube as well. We're live on Austin's YouTube, Randy's YouTube, my ex account, dude. We are live everywhere. Holy shit. Man, this is a pretty lackluster FOMC so far. But honestly, we're not really in any big drawdown, and it still feels like we're going to go higher for me. I could be wrong. But I'm not really too scared right now in this position. There's also a lot of SMT. Like, there's SMT down here. There's a higher time frame SMT. There's SMT everywhere, man. SMT all over the place. And like Steve just said, trend is your friend. And on top of that, we have a draw. Like, I like these equal highs as a target. And it's FOMC. So listen, it's 150 points away. But it's FOMC day. We can capture moves like that today. So we're going to see. We're going to see. If you guys notice, I'm in on 2 micros, and I've been trading my Apex PAs with 2 micros for the entirety that I've started these accounts. And my goal is to get the 14K payout and show people you can do it trading 2 micros if you want. Wow, there's absolutely nothing going on so far. Pretty boring. Come on, Powell. Pump the market for me. Start talking. Start yapping your head off. Come on. What are we doing? Trump is speaking? Where? Oh my God. Abby, how did you torch 12 accounts today? What? Bruh. When? You were on stream with me. Like 2 hours ago. When did that happen? Holy shit. Honestly, I don't like FOMC much either. It's kind of my least favorite news day because number one, it doesn't happen until 2 p.m. So you're waiting around all day. You're getting weird, funky price action most of the time. Today was not so bad, but usually it's even worse than this. Then 2 o'clock comes, you get a data release, which that should be the end of it. You should be thinking, okay, now I can trade. But the reality is you're waiting another 30 minutes for Powell to start yapping his head off. So it's really not the best news day. I know a lot of people that hate FOMC. For me, I'd say I'm neutral. I've had some really good days trading FOMC, and I've also had some horrendous days trading FOMC. So I'm kind of 50-50 on it. Abby on tilt. Yo, no, for real though. Like, what happened? Yeah, San, when she was on stream, she said she ain't torching any more accounts for 2026. Sorry, we gotta call it out a little bit. Oh my God. Hey, I see some people in the BSC. Gather you forgot about the Black Shirt Club hot seat call last week. So Abby was in the hot seat last week. How did that go? Yeah, man. I wish I could make those meetings, but I'm usually streaming here, so I can't be there. On top of that, I'm just, bro, I don't have a single extra second to my life right now. It's just how it is with the baby. So maybe one day I'll be able to start joining those calls. I'd love to be a part of them. Just I can't right now. Just simply can't do it. Flipped a green day to red because I completely lost track of time and was in a trade when FOMC started. That's a bummer, man. Listen, FOMC really does kind of wreck the most people, I think, out of any news event. There's something about it. Oh, my God. Erkan just said I'm shorting this shit, by the way. Dude, me and Erkan have been like going back and forth because Erkan's been killing it lately. He's in on my stream on PFM TV a lot. And I swear to God, this dude is in, like, I've been doing really well this week. He's in every trade that I take. Before I call it out, he's in the same trade, all of the winning trades. But on top of that, he takes all these extra trades that I'm too scared to take, and he keeps winning. Like, dude just keeps winning, man. So the fact that he's shorting is kind of pissing me off right now. Not gonna lie. Pissing me off, bro. Nothing is more important than the baby. Of course, man. Of course. No, dude, I'd rather be with the baby than the stupid meeting. But, you know, I'm just saying, I'd like to be at the meeting. I can't wait till one day I can be. Yeah, the calls are very beneficial in the Black Shirt Club. I'm sure they are, man. See, when I was in the Black Shirt Club, we were doing the one-on-ones, which are cool because you get you get a lot of focused help. But I think the group meetings are better because there's just like more people holding you accountable. There's like I don't know, there's like more community around it because I feel like when everyone's doing one-on-ones, people can be kind of more in their own thing and then they just talk to their coach and they don't engage with the rest of the group. Whereas like when you're doing the group calls 3 days a week, I think you create more of a community. Cal says, I'm always oversized. Some stuff fucked up in my mind these days. All my trades are winning, if not oversized. Then you got to, dude, size down, bro. Listen, I'm 77 ticks in drawdown right now. And I'm genuinely not stressed at all. I do got a feeling this is going to come all the way down to the previous day's point of control. I think it's going to happen. I think I kind of messed up a little bit, but I'm going to hold the trade for now. I'm in on 2 micros. So this just, bro, I'm telling you right now, this does not stress me out at all. I'm genuinely not stressed. Because I'm trading small enough size. Now, if I was trading 2 minis, which a lot of people do that type of thing, they trade 2 minis on a 50K account. So they blow their account in 2 seconds. Zach, Luna said he's going to join. Is he coming? I think Luna just meant that he's gonna like tune into the stream and watch. I don't think he's joining the stream, but he might be here. He might be in the chat. Luna, if you're here, let us know, bro. Let us know, brother. I think you have the right direction, but it might go to that POC then pop. Yeah, I mean, technically there's been an 80% setup in play all day, which like Erkan was smart. He was shorting up here because he's just like, bro, we're going to at least, the market's going to magnetize towards that point of control. I don't need to take profits at the point of control. I could just short from here to here with the idea that the drawn liquidity is the previous day's POC. And to be fair, I'm getting in before that happens, but it's news, man. You know, sometimes you just want to get positioned in what I still think is overall a good price for the market to go higher. So yeah, I'm going to sit through some drawdown if it wants to go down to the POC. And I have a clear invalidation. And I'm just going to position myself properly. So that's what we do. It's the most we can do. But the cool thing is, if I do take a loss here, it doesn't mean anything towards my account. My account's still in profit. I'm not close to blowing it. Like it's all good. Now, on my other accounts, on Top 1 Futures, I am trading more aggressively still. This is what I've been doing. It's been a little different. So on the Apex accounts, I'm trading specifically 2 or 3 micros. I haven't gone over that position size. And the goal is to capture bigger moves, but I'm not using tight stops or anything. I'm still using wide stops. I'm giving myself all the room I need, but I'm just looking for bigger moves with smaller contract size and like trying to capture a big portion of the range. Now, with Top 1 Futures and my other accounts, Tradeify, I took a 9K payoff from Tradeify the other day. With those accounts, I'm doing my usual small base hit scalping method. Oh, wait, hold on. One. Sorry about that, fam. One day I'll show the baby. Not yet, though. I'm not ready to show the baby. It's just us. I'm back, right? You can hear me. Please tell me I'm back. I'm back. I'm back, right? Please, chat. Let me know. Okay. $750 loss on all accounts, and all accounts are lost, right? What? No. You're thinking about the 30% rule, Felix. That's, you don't lose your accounts if that happens. You just, if you try to request a payout, they're going to deny it for breaching the 30% rule, which is you can't risk more than 30% of your overall drawdown on a single trade. But I'm in on 2 micros, bro. Like, there's no way I'm holding this 750 ticks in drawdown. That's what it would take for me to hit that. I'm not going to do that. Oh my God. Yo, I'm looking at the comments on Austin's YouTube. What is this, bro? This dude is spamming. Bro, please help me with 200. Help me with $200. He's done this. Austin, I'm going to ban this guy. Or I'll put him in a timeout just in case. I don't know if I'll piss you off. I just put him in a timeout. Jesus, people are crazy, dude. Look at that. We're back up at about to be in profit, man. Come on. 7 minutes till old Powell starts speaking. Yeah, Abby, actually, I want to get more context into this. I'm reading the chat. They're asking more context into your 12 accounts being blown. Were you trading 12 Apex accounts or something, or did you reset 12 times? That's what I'm wondering right now. Did you reset 12 times, or were you taking advantage of the 90% off Apex deal or something? Speaking of which, guys, if you do want to trade with Apex, I have a code ZARB, ZARB, for 90% off. I think it's running for a week. So load up on accounts if you want, man. I got paid out on 12 Apex accounts last month. It was my first time getting paid out and trading with Apex. And honestly, I had an amazing experience. Like, I was always worried about that firm. I was always worried I'd get a payout denial or something. I had no issues. My payout was approved in 24 hours. Money was sent another 24 hours later. No questions asked. No worries at all. So I got nothing bad to say about Apex. As a newer trader, when Powell starts speaking, does the market freak out again? Yes, exactly, AJ. There's going to be another volatility injection once Powell starts speaking. And it's like a weird one because it's not off a data news release, right? Where it's like you get a number and the market reacts to that number. It's like there's like a wave to it, an ebb and a flow, because Powell will say something and the market will increase in volatility and then it'll slow down. Then it'll say something else and it might reverse. Like it's a messy news event to trade. FOMC can be hella messy, which is why we're trading small, guys. Okay, you reset 3 accounts 3 times and then opened a few $89 ones. Okay. Yeah, fortunately, I'm keeping Top Step in business. God damn. 3 resets in a single day is a bit much, Abby. I gotta say. Listen, we've all been there. I've done it. I won't lie to you guys. I've done 3 resets in the same day. I've been there, but I haven't been there for quite some time, and that's not very sustainable, my friend. So, listen, she got a big ass payout from Top Step. So, listen, at least you're like, you'll be all right. Yeah, we've all been there. All right, chat. What do you think now? W or L on this trade? Spam W's or spam L's? I think it's going to hit. I think we're going to hit. For the record, I want to hold for 306.50. These equal highs. Hassan says, Zach, buy orders are piling up on MNQ. What, on the book map? Is that good or bad? I don't even know. I don't know. Let me know if that's good or bad. Sounds good. W for now. W, I'm in longs too. Okay, Cameron's following me on the longs. Steven says I'll say W. I still think when Powell starts speaking, we could do some bullshit like this. Hold up. That could happen, and I'll be ready for it if it happens. We won't get stopped out. Felix exited. I don't dare hold while Powell is speaking. Let's see. No, I'm kidding. You're not at all. You're probably smart. This was so close to getting blown. It would be great if I could actually hit max profit in some Top Step combines. I haven't been funded with Top Step since August. Either August or September, and I did take a payout with them. I took a few payouts in the summer, but then I stopped trading with them completely, man, because I got tired of Project X. But one thing I'll say about Top Step, you can't hate on no consistency rule. Like, it's just so easy to get a payout. I say that all the time. So I would not have bought these if Trade-Evade wasn't down at the time, but I bought them. So now I kind of hope I pass them. Dude, Project X is hot ass. Finally, man. Thank you. Someone agrees with me. It's awful. Terrible platform. Okay, 2 minutes for Powell. So basically, on top of 1 minute current range, there's buy orders, and at the bottom of the range, same thing. NQ isn't making it. Okay. Okay, so it's more neutral. You're seeing orders on both ends of the range. Yeah, lockout controls, but I think Tradevate has those too now. Honestly, man, like, it sounds crazy, but I'm kind of at a point where I don't feel like I need the lockout controls the way I used to. I don't tilt like that these days. Like, I don't tilt as much, man. I'm okay with just losing $500 on the day and just saying, like, fuck it, coming back tomorrow. I'm not saying I never do. After I got that payout with Tradeify, I ended up blowing the account. So I still do it, but I don't know. I don't do it as much these days. And usually I get a payout before I tilt. All right, 30 seconds. Oh my God. That was looking so good for a second. I still think we go higher. Oh, fuck. I'm just kidding. So I'm really not too worried. But I do think it looks like we're going to get that POC. Damn, man. All right. So now we got to be careful, okay? Because if we expand lower to the POC, I got to actually give it some legitimate room and see where I want to cut it. You know, I want to give it room so that it could break a little bit below but come back up. But if it just starts ripping lower, I'm going to have to cut the trade. Jesus, man. FOMC really is so bad. Erkan saying, Zach, get out. I'm not getting out yet, bro. We're not doing it. We're not getting out. Listen, down to the POC, you know how big of a loss this would be, man? It's like a $400 loss if I get out at 55. Not that big of a deal. Whoa, back in profit. What a mess this price action is, man. What a mess. This is incredibly disgusting price action. Like, what is this, dude? Jesus. Stick to the plan. Stick to the plan. My plan could still fail, but I'm sticking to the plan. Oh my God. See, as soon as I get cocky, back in drawdown. Wow, literally as soon as I got cocky, it went right back into drawdown. Jesus Christ. Dude, this is actually the worst price action I've ever seen. Dude, what is this? Also, ES is like really trying to hold up, which is kind of crazy. Like if you're trading ES and you're long, you're in a much better position than me compared to NQ. So right now, the two indexes are kind of fighting with each other. Who's going to win is the question. What sucks about this, and Erkan, I think this is why you told me to get out, is that now we have like a bunch of stacked lows down here, and you know that eventually we will come down and take these lows, whether it's like today or maybe it's tomorrow, but it's like less. This is not like a super bullish looking range. This is like we've just kind of engineered liquidity on the downside. Now, it really is still just like a mess of nothing. Anybody got word on what Powell's saying? I'm just trying to look at the daily. Like, are we going to front run this all-time high and dip much lower? Or are we going to come up for all-time highs? It's kind of the question here. Again, this 4-hour fair value gap is really kind of the key. We just don't want to see a strong closure below this gap. And if we do, I think you go a lot lower. I think you come down towards like 780s. This is like really retarded though. Ercon closed your short in profit. Let's go. Bang. Sorry, dude, didn't mean to tell you anything. What do you mean? That's what you're here for. That's what you're here for, bro. Let me know when you're in a trade. He's talking about inflation. What do you know? It's declined. Tariffs. What is it? Okay. Tariffs. Inflation. Mark it up. Down. Maintain rates. Inflation's gone down. Stabilizing labor markets. Cool. Yeah, but will my inversion fair value gap play out? Can Powell tell me if my inversion fair value gap will play out? Why is he talking about tariffs and inflation? Will the 15-minute bearish fair value gap get inversed? Powell. People are spamming Epstein. What? On the Powell speech. I mean, that's kind of predictable. Yeah, man. I feel like the last time we streamed FOMC was a lot more fun. Like, there was some real volatility right off rip. Bro, nothing has happened. Okay, can we get a push? Yeah, it's really a mess. All right. Be honest, chat. Who else is in a trade right now? Who's in a long? Who's in a short? What's your entry? Who's followed me on this long? Because it doesn't look that bad. I mean, the price action's a mess, but at least we're in profit. Take the trade on YouTube. You are in a long. Ercon's flat. AJ just watching. Yeah. Man, I'm at a loss for words. I don't know what to do here. Sorry about that. I keep disappearing. I'm really at a loss here. Like, I don't know. We're just going to wait it out. We're just going to wait it out. William managed to claw back losses, up 2K on the day. Let's go, man. Let's go. Yeah, P&L check chat. Where are we at? Green or red? Let us know. Be honest, too. Remy's flat. Williams got a buy limit at support. What's support? What price? Steve, you're watching gold? I don't know how you guys trade this. I mean, it looks pretty clean. If you're like just long biased, I guess it looks pretty fun to trade, but I was never a gold guy. Just never really worked for me. This is seriously like the least exciting FOMC I've ever experienced. Flat. Green on the day, negative 280. Red. Ercon's up 600. Nice, man. Which is ass for me. Ah, cocky. What's bad about that? Is that on personal or funded? Because I know you'd be trading a lot of personal account. Man. Okay, guys. Now it's starting to look like we are going to make a new low. But then again, I don't know if I want to induce myself into closing early. But like we've swept the upside of all these candles and we have not taken out the downside yet. And, you know, it kind of feels like, yeah. Just to give max pain, it's going to stop people out on both sides before it makes a move. So it stopped out the top. Now it's going to stop out people on the bottom. And if it doesn't, then I don't know what to do. I went back to gold because it can move during London session, so I can trade it if DAX is slower away. Yeah, gold also moves really well in the Asia session these days. So for anyone that's working at 9 to 5 still, if you're on Eastern Standard, take a look at gold, man. It moves nice in the Asia session these days. Honestly, NQ moves well in Asia as well. You could trade Asia session on NQ these days. Gold makes you crazy. You'll buy and it will sell for me. NQ and ES is easy. Man, famous last words. Don't let NQ hear you. Don't let her hear you saying she's easy, because she'll make it hard. This is crazy. There's got to be an explosive move coming. It has to come. Shout out to Zach. The man streams for like 8 hours a day, gets like 2 hours of sleep, dude. I know. One day I'll sleep again. For anyone that has kids, can you tell me, when do you start getting sleep again? I'm genuinely asking. Anybody got advice for me? How do I sleep when I have a kid? Yeah, we're grinding though, man. We're grinding. Luckily, it's not 8 hours a day. I don't stream 8 hours a day. I do stream about 5 when I do ASFX 3 days a week. And then the other 2 days, I only stream like 3.5 hours. But yeah, it's a lot, man. It can be a lot sometimes. But it's fun. I'm usually staring at the charts anyway, so why not, you know? Get paid a little extra to trade. Why not? Are you guys kidding me? You guys are really you guys are messing with me, right? Never? I'll never sleep again? Not until they're 18. I won't sleep. That's crazy. I didn't sign up for this. I didn't know that. I thought it was going to be like a year. I'm just kidding. Split a gummy. Yeah, but then what if you're knocked and you need to you need to wake up? That's the problem. You can't be ready for it. You got to be ready at all times. After about 16 months, they sleep through the night. Man. All right, we're in it. I'm in it, man. I'm in the trenches. Zach, who did you watch before streaming yourself? That's a good question. I watched a lot of streams, man. I always had a stream on. So for me, it started with Top Step TV, which that's kind of like they kind of opened up the streaming game. Because before Top Step TV, there was not a lot of people live streaming futures or Forex or any trading for that matter. It was not a big thing. They really kind of opened up the streaming universe. So it started with them, and then I learned pretty quickly that like I'm not getting any valuable information from listening to those guys trade. No offense, but like, come on. So then I started looking, and more people started streaming. So some of the people I really liked was, I did watch a lot of ASFX TV, honestly, but I also watched a lot of Brian Stonk. He's an ICT trader. He streams during the PM session, so I'm kind of like, he's kind of my competition, but it is what it is. He's a great streamer. Not that he's a good streamer, but he's just a good trader. So I watched a lot of his stuff, and he trades ICT, so I learned a lot from him. Lanto, Desi, those three are like a crew, so they stream together a lot. I always was tuning into those. Trader Kane, when he was streaming, I was part of his Discord for a while. Like he would live stream in there every day. That was pretty fire. Who else? I feel like there's more. Nah, that's pretty much it, man. Yeah, mostly those dudes. Like the Brian Stonk, Desi, Lanto, like those ICT guys. They put me onto the IFVGs, the inversion fair value gap. Brian is goated. He has a $5 million payout loading on Apex. Yeah, nah, Brian's cool, man. He's good peoples. I've talked to him a little bit in the DM because I learned a lot from him, so I gave him props. Nah, yeah, he's legit. Like, listen, he does all he obviously makes a ton of money with affiliate stuff too, but the man can trade. I watched him live stream for a year and a half, almost 2 years straight, and learned from him a lot of stuff. So like the man can trade. This is crazy, man. We have 13 minutes left before I got to get off, and the market has gone absolutely nowhere. What a wash of a day. Today's been like a total wash, unless this ends up hitting. Thank you for the answer, man. Of course. It's just funny, like, when Top Step TV first started, I mean, it was so fun because it was like, you know, I was still working at Trader Joe's at the time at the grocery store. So I would always have like an earbud in, and I had longer hair. So I would hide my earbud behind my hair, and I'd wear a beanie over it. Even in like the dead of summer, I was wearing a beanie so that I could hide my headphones, and I would just have Top Step TV in there the whole time. And I'd be going to the bathroom, trying to take my trade. I watched the first ever Top Step TV live stream. Like I was on that from day one. Other half says, no stop loss? Hilarious. Yep, no stop loss, bro. I'm going to blow the accounts. I want to blow my accounts on 2 micros. I must have stop loss on my sim account with 2 micros. There we go. All right, we're getting a push. We're getting a push. Stop loss is for retail traders. Yeah, man. Listen, dude, if I put my stop loss there, the market makers would know where it is. So I keep my stop loss up here. They'll never know. All right, we're getting a push, man. Now, will there be follow through? I don't know. But we really need to inverse this 15-minute. If we can get above here and above midnight, I think we're golden, man. I think we're going to push. But we really got to get above. We could still fall right back into this range at this moment. So, no celebrating yet. Take the Trade says respect for you guys trading live. Appreciate you, man. Remember, guys, if you're on YouTube and you want to watch us trade live here every single day, join ASFX TV, man. Check it out. You could use code FIRST, get your first month free. So you can check it out. It's not just me that streams. I don't know if you're just tuning in today. You got Austin, you got Evan, James Bruce, Randy, all those guys. They're live here way more than I am. They're live every single morning at Market Open. Oh, God. Ercon's shorting the top of the range. Bro. Chill. Chill, man. 15-minute invalidation gap if it fails. Yeah, I know. I get it. You have a clear invalidation. You want to see previous day's point of control get taken. There's not a lot of displacement to the upside here. Like, it's not like we're creating a bunch of bullish fair value gaps. You might make one here on this 5-minute candle once it closes, but we don't have one yet. So I don't blame you. I get it. I'm just trying to follow the trend. You know, the market can just be trend. It could just follow trends for a lot longer than it could make sense from a technical perspective. And we pulled back. So I'm just trying to see that pullback as a gift and follow trend. Get positioned at a good price. And I do see draws on liquidity above. You know, I see the equal highs. So that's enough for me. Up 363 in 2 TOF 50K accounts from 2 long trades with 2 micros. Let's go, man. So you caught a 363 tick move if you were on MNQ. That's a good trade. All right, we're pushing, man. We're pushing. 8 minutes left. I can't believe we're not going to see this trade hit TP on stream because I do have to go at 2 or at 3. I got to leave at 3. Maybe not. Maybe I could stay a few extra minutes. We'll see what happens. Come on. Push. Push. Okay, moment of truth. We really got to break above this fair value gap. We really got to do it, man. What are we thinking now, chat? Trade looks better. Took a while to get here, but it's looking better. Break above and close. I can probably look for an entry right on the 1 minute. Yeah, listen, like, this is the thing. If we're going to go, if we're if we close above this gap, we got 6 minutes left on this candle. If this 15-minute candle can inverse this 15-minute bearish fair value gap, I'm telling you, we're going to push. This is our line in the sand. Like, this needs to get inverse. If it does, we're pushing up to 300. That's my take. Clip it. But it's only going to happen if we can inverse this gap. If it holds as resistance like Ercon's hoping, we're going to fall. We're going to fall down hard. Here, and now we're going to, okay, so we got 40 seconds left on this 5-minute candle. Why are you not taking the base hit? So I've been explaining this, Ercon. On my Apex accounts, I'm trading differently. So on my top 1 futures accounts, Tradeify, I'm doing my base hits, but I'm trading bigger size. On Apex, I've been making it a point that I'm trading 2 to 3 micros on every trade, and I'm specifically looking for those bigger expansive moves. I'm not using tight ass stops though. I'm giving it a big amount of room, and I'm just trying to capture the correct draw on liquidity. So I'm trading a little differently with Apex. And the reason for that is, number one, I'm trading 7 accounts. So trading 2 micros times 7 accounts is still some decent size. Number two, the intraday trailing drawdown, right? So I'd rather just get through the intraday trailing drawdown and try to make it to like $54,000 balance slowly and efficiently without raising my cortisol too much. So trading 2 micros on these 7 accounts, like, I'm really never stressed about anything that happens. I'm just kind of trying to get into a position, looking for a clear draw on liquidity. Yeah, I need to capture a bigger move, but I just, I just let it rock. And if it works, it works. If it doesn't, it doesn't. If I was in this on top 1 futures, I'd have been out at like 25 points probably. But I didn't want to do that because I didn't want to get in on 1 mini in this range during FOMC, because we could easily have fallen down 100 points. So I just felt like it was the safer play to do my Apex accounts and do smaller contract size. And just the thing is, usually with FOMC, we'd be getting a bigger move. We should be getting an expansive move. So it can still happen too. So if that does happen, we're going to profit from it. Oh yeah, also, I was going to point this out. So we did create a 5-minute bullish fair value gap in here. So I'm going to get rid of this so the chart's not too messy. This is going to be like a pretty strong line in the sand right now, guys. So we created a 5-minute bullish fair value gap, right? This is the key. I'm telling you right now, this is it. If we inverse this 15-minute and get above 216, we rip up to 300. The inverse of that is this. If we invalidate this bullish gap, I think there's an amazing short setup in here for an inversion to do something like this. So this is the key. This gap is absolutely key, man. Like, if we inverse this 5-minute gap now that we've broken to the other side of the range, I'm not going to let the trade go this deep into drawdown. I'm not going to let it go down to 80. I'm actually going to just cut the loss because too much has happened now. Like, I've been given enough information. This gap either holds the support and continues us higher, or it inverses and we're going down to these lows and there's no reason for me to hold the trade. So now we at least we have a really clear idea on what we want to see. So we're ping-ponging between 2 fair value gaps. One of them is going to win. So I don't need to have this up. You get the point, though. What do we think, chat? That gap's holding up so far. That's the reaction we want to see. I want to see a dip into the gap, a nice wick, and for it to push higher. That's what I want to see. Now, I still got a minute and a half on this candle, so it could still get that inverse, but this looks good so far. This is kind of what we want to see happen when you want to see a fair value gap hold price. This looks good so far. Felix says, entered here, stop loss beneath the wick. You entered long? And where's your stop? Please don't tell me your stop is at like 169. It should be like down here at 110 or something. Let me know what wick you're talking about. I can't believe I'm still in this thing too. That's hilarious. I forgot about this. $69. All right, man. Do you, bro? I think it's a little too tight because you can still wick lower and it can still go in our direction. But I think you mainly want to be more focused on how these 5-minute candles print. Like, it doesn't look like we're going to inverse on this 5-minute gap. Oh God, we might. Damn, we might actually do it. We got 10 seconds left on this gap. It was looking good for a second. Like, see, you just got stopped out. Maybe your stop is good. I don't know. I'm trying to wait. We got. Damn. Okay, we just inversed that 5-minute gap. So now I'm going to get ready to cut this if we go any lower. There's no reason for me to stay in it. That sucks, man. What a waste of time. Let's see. This is like a weird inversion because it like kind of inversed it, but also I'm just going to give it a second. We dipped into premium of the open sell-off. Did we really? Where's 930 open? Right here? You pulled it from here? Yep, we tapped premium like to the tick. Wow. Okay. Well, I'm giving it some room. This is tough because like we didn't actually get followed through on that inverse. So I'm holding it for a minute longer. We need to see it pop now. It goes back below 152. I got to cut. All right, guys, if we don't make a new high on this candle, I'm going to cut the stream because I got to do some other stuff. But I'm going to stay in this trade. So this is my trade. What a terribly boring FOMC. I feel like this is going to work still. Yeah, this PA is trading hard mode, but that's part of why I was like, I just want to get positioned somewhere and give it the room it needs, because if I'm trying to use tight stops and be too precise on the 1 minute here, I'm going to get destroyed. That was kind of part of like the thought process, which is why I said I just want to position myself with a small enough position size that I can withstand drawdown and just try and predict or just position myself for whichever direction I think it's ultimately going in. That was the idea. Yeah, the move did happen overnight. You're right. You're right, Alex. It did. Chat. All right, I'm getting bored. Not gonna lie, I'm getting bored. I'm not gonna cut the trade, but I'm gonna have to get off soon. Huracan's holding your short into FOMC and into Asia. You're gonna hold overnight. What broker are you using to hold overnight? How much balance do you need in there to hold it overnight? With TradeAvate, I need like 18 grand in there, which I still don't. I don't want to have that much in a personal account. Like if I could hold overnight with like a 10 grand personal account, I'd be down to do that and try and find some swing trades, but I can't hold overnight with anything less than like 17 or 18 grand. It might even be more now. TradeStation, how much do you need in there to hold overnight? $3K? Oh, you can hold one micro with $3K. That's not bad, man. That's actually pretty nice. All right, guys. I think that's going to do it for the FOMC stream. I'm going to stay in this trade. Erkan's going to stay in his short. I'm going to stay in my long. We're going to see. May the best man win. We'll talk about it tomorrow on stream. We'll see who won. But other than that, I think I'm going to just leave it there, guys. Again, kind of what I'm seeing. If we get back below 150, you get a 5-minute closure below 150, I think you're coming for these lows. But if you could just hold this overall area and we can get above 220s, inverse this 15-minute bearish fair value gap, I think we're going to come up to high day or like come up towards these equal highs. So that's kind of what I'm gunning for. And we'll just let it play. I am going to place a stop loss now because I'm going to get off the charts and we'll just let it rock. So that's it, man. Peace and love. See you guys tomorrow, 1 p.m. We'll be back at 1 p.m. for the usual Killzone stream. WASFX. Thanks, guys. Peace.